Intel, BlackRock, Goldman Sachs, those businesses can be hard to understand, but this business I have for you has got to be one of the easiest to understand. So if you know of an easier business, please share it in the comments below. And I'm going to give you a quick bonus peek into another surprising dividend stock that you would not think is a major player in the business of making pizza. I mean, come on, is there an easier business to understand than making and selling pizza? And the stock that's popped up on my radar is none other than one with a really cool ticker symbol, Papa John's, ticker PZZA. Now, Papa John's tells me that they're all about quality pizza. They started in a broom closet in Jeffersonville, Indiana over 30 years ago and now serve their pizzas in over 5,000 locations worldwide. They also say they're big on using high quality ingredients and that their pizza is more than just food, it's part of your special moments. And they believe pizza should be fun. But their stock price has not been fun lately, as it's down over 60% since its all-time high in November of 2021. You know, one of the things that Papa John's is known for is its rewards. Now this reminds me of our own Dapper Dividends rewards program, where you get the 4th newsletter for free for every 3 that you read. So be sure to check out dapperdividends.com for all the details. Papa John's has been struggling a bit like a lot of other consumer discretionary businesses because of consumers tightening up their wallets. You've also got inflation and labor costs and even higher gas prices. So from their Q1 24 earnings report, North American sales were down 2% year over year and international was down about 3%. Now internally, after almost 5 years at the helm as Papa's CEO, Rob Lynch was recently hired away by Shake Shack, leaving Ravi Thanawala, who has been Papa's chief financial officer since July of 2023 as its interim CEO. And before coming to Papa, Ravi Thanawala was CFO of Nike's largest division, Nike North America, for almost 7 years. And Papa's board said that they would take their time finding the next CEO. Oh, and check it out, Ravi Thanawala bought 1,900 shares on the open market with his own money at an average cost of $52.41, bringing his total Papa shares to almost 39,000. Now, Papa also announced its Back to Better 2.0, which is Papa John's plan to grow bigger and better by spending more on marketing, offering deals to attract more franchisees here in North America, and making changes to become a stronger global brand, like opening over 100 more international stores this year. So they're all about becoming a stronger competitor and moving up from the number 4 spot as they chase Little Caesars, Pizza Hut, and the number 1 spot at the tippy top held by Domino's. I found it interesting too that on the Q1 24 earnings call, the dividend was mentioned 0 times, and now we're whisked away to the land of simplysafedividends.com, where we'll look at Papa John's, ticker PZZA, has a unrated dividend safety score. Doesn't mean it's a bad investment, so let's dig a little bit under the hood. Now, Papa John's has some tasty dividend growth, 22% very fast 10-year CAGR, and they last raised that dividend 14%. Now, they went ex-dividend on May 17th, and it looks, if all things stay true, that the next dividend announcement will indeed be a dividend raise, so stay tuned for that. But they're currently paying out $1.84 annually per share, which we do think is going to go up. So Papa's free cash flow payout ratio had been pretty low, currently sitting at 66%, but it had been as high as 139%. That's no bueno. As you can see, they hit a pretty good sized air pocket in their free cash flow per share, down to $1.11, but all the way back up to $2.60, so they're easily able to cover that dividend. Last 12 months, there you go, they got negative sales growth, which I think means they'll probably get positive sales growth sometime in the future, which is probably going to be good for the stock price. But their total sales going up largely to the right. They had that little bit of a dipsy-do there in 2018 and 2019. They've mostly been buying back shares, currently down to 33.8 million shares outstanding. And I think their return on invested capital is outstanding. It's usually in the 30 to 40% range, but 2018, 2019, 2020, they hit a bit of another air pocket there, which knocked it down. And you can see the cyclicality in their margins. We go down and then up and then down. So that's kind of what happens with some of these consumer discretionary businesses. So this shows that that, Papa has no net debt to capital and an ICR, interest coverage ratio, not very high there, which is $3.76 of operating income to cover every $1 of interest expense. But if we look at alpha spread and we check out Papa's balance sheet decomposition, currently they have $27.8 million worth of cash on hand, and their long-term debt is $785 million. So they do have as a net debt of approximately about $741 million. So check it out. AlphaSpread.com gives Papa John's an intrinsic value of about $94.36. Remember, there is no exact intrinsic value. It's a guesstimate. It's a range, $94, making them about 50% undervalued from the current price of $47.17.5. And that's the base case. If we go worst case, they say 5 years of negative growth, $80.92, so about $80, which could be about 42% undervalued. Morningstar.com gives a fair value of $69. And from our friends over at finchat.io, a price target of $67.14. So when we mishmash the three together, average it out, we get about $76.83, which from today's share price is about 38% upside. Now we want to know, what do you think about Papa John's? Would you invest in this for the long term? Honestly, we're still deciding what we want to do. We might add some shares. My daughter, it's one of her favorite pizza places, and I don't think they're going to go out of business. Hitting a bit of a rough patch right now, but I think that they will eventually recover, although we don't know how much lower it's going to go. So there's a saying that you wait for the stock to stop falling. Don't try and catch that falling knife. You're going to get your hands cut. Wait for it to fall, hit the floor, rattle around a bit, and start coming up before you pick it up. So we may give it a little while to see how much lower it's going to go and if it'll plateau out and then start coming back up before we decide to stake a position. And now I told you, I had a surprise pizza place for you. Check it out. Casey's, ticker CASY, Casey's General Store. I've never had the pizza from there, have you? But it is the 5th largest pizza chain in the United States. They say it has a cult-like following. The dough for each pie is made by hand and from scratch every morning at each location. Still sounds a little gross that people in a gas station are making pizza pies. But in addition to them being the 5th largest pizza chain, check this out. Casey's is also the 4th largest holder of liquor licenses in the United States, making it the perfect one-stop shop for a dinner and a six-pack. And in October of 2023, Casey's was granted the trademark for, quote, the official pizza and beer headquarters by the U.S. Patent and Trademark Office. So let us know if you think that Casey's Pizza is also really good. Check this out. This is one where it's just looks like a good business. Dividend safety score of 91, very safe, very fast dividend growth, 23 years without a reduction, 15% 20-year CAGR for Casey's, raised that dividend 13% in June of 2023, so we got another dividend raise coming up. They go ex-dividend July 31st, paying 43 cents per share, and again, this should be the last one before they raise it. Their dividend yield is 28% below the 5-year average, so no deals here. The dividend is below the 5-year average. The PE is above the 5-year average. It's pretty much maxed out at its 52-week high. But check that out. Free cash flow payout ratio, 18%. $9.37 of free cash easily covers the dividend. Looks like they've run into some negative sales growth the last 4 years, but look at those total sales just up and to the right. As of late, had been kind of flattish there for a few years. Mid-teens return on invested capital. Return on equity looks nice. Operating and free cash flow margins could be a little bit better for Casey's, but they have been paying down debt, currently down to 33% net debt of capital, and their net debt to EBITDA, remember this means it would take 1.44 years to pay off the debt with their EBITDA and 1144 of ICR. And because I like you, we'll look at Alpha Spread's intrinsic value. They give it $239, so it's about 29% overvalued. In the base case, $181, about 46% overvalued. So let us know if you own Papa John's or you'd buy it. What do you think about Casey's? Are you buying Casey's? And would you buy the mystery stock that was revealed by Berkshire Hathaway in this floating little box next to my head? We did a little bit of analysis for you over there. So if you do click this floating little box, I'll tell you all about it there.